Well, good evening, everyone, and welcome to yet another one of our webinars that we hold here from Sandton City in Johannesburg, South Africa. I don't know if I have any international guys that have joined us for the first time. If you have, welcome on board, guys. Right, what are we going to do tonight? First of all, let me just quickly remind you that the webinars that we're holding are actually aimed at helping you, the novice trader, find your feet around the MetaTrader 4 platform. Now, we know the first time you start trading, it's a bit of a scary experience. Where do I go? What do I do? How do I do these things, etc.? Well, I've got some good news for you. For those of you who've attended my past webinars, I've been making mention that we are recording these things. All right. So the great thing is, yes, it's going. We've already got 3 of the videos recorded. If you want to get the links that you can actually download these, please send me an email to Tony James. It's one word, Tony James, Tony spelled with a Y, at acmgold.com. All right, so send that through to me and I'll send you the link. It's a 4-part video series we got. The first one is obviously to introduce you to the basic platform. The second one is how to set up your trades, which is what we're covering tonight. How to put in a trade, set up your stop loss and you take profit. Third one will be how to set up your profiles. Now that's something that's very, very important and very exciting to do. And last but most certainly not least, the fourth one will cover how to trade your Kruger rates. Okay, so let's get straight into it, shall we? And let's go into our platform. Right. When you are putting in a trade, there's a couple of do's and don'ts that you have to follow. And the first thing is when you decide now which currency pair you're going to be trading, okay, don't just jump head on in and just go and put in a trade for the sake of doing a trade. No, hang on, slow down. What you must do is, first of all, take a bird's eye view. So now in this particular case, I'm using the Euro USD. And let's look at a daily chart. Now, as you can see, I've got some added baggage over here. So let's get rid of it, shall we? Let's get rid of the market watch. Let's get rid of the navigator. And last but most certainly not least, let's get rid of the terminal. So there we go. Great. So I've got the whole screen to myself, as it were, and I can go and have a look and see what is happening, what is the trend in the market as far as the Euro USD is concerned. And in this case, I can see, all right, fine, it's an upward trend. So that would be a buy market. Okay, it goes up, I buy, comes down, I sell. And now I zoom a bit closer because I want to see, is that trend the same sort of thing with shorter time periods? So let's go and look at a 4-hour time period, shall we? Yes, it's confirming it. It's going up. 1 hour. Oh, okay. Now look at this. Look at this. This is interesting because those were longer time periods. This is shorter. So it all depends on what kind of a trader am I. Am I a day trader? Am I in and out with my trades within 24 hours? Or am I the kind of trader that follows a long-term strategy where I'd leave my trade in, say, a couple of days, a week, maybe even 2 weeks. All right. So it all depends on your style of trading. Now, myself, I like to use swing trader. Okay. Now, next week, I'm going to cover exactly what swing traders are, day traders, and position traders. So if you want to see that webinar, remember that once we finish here, give it maybe tomorrow. All right. They would have updated the website with the new link. You just click there and you just register for that. All right. Great stuff. So now, let's say I'm a day trader, so I'm now going to take a closer look. My 1-hour graph says, hang on, it's turning, it's coming down. All right, 30 minutes. 30 minutes confirms it's coming down. 15 minutes, doing the same sort of thing. All right, so now I'm getting a different story because I'm trading on a shorter time period. I'm going to put in a sell trade. So what I would do now is I've now gone in, zoomed out, bird's eye view, slowly but surely zoom in, and I make my decision. If my graphs are giving me mixed signals, all right, a word of advice. Rather just hang 10 a little bit. Wait, let it stabilize itself. If you're not 100% certain, it's not giving you that clear signal you're looking for, rather don't put in the trade. Okay, just hang 10 a bit, be patient, because that's one of the biggest things, one of the biggest enemies of a novice trader is patience. They don't have it. They feel, I've got to put in this trade now. If I don't put in this trade, hell is going to break loose. No, calm down. All right, take it easy. This is going to be fun. It's going to be enjoyable. Okay, so now, I've now decided this is the way the market's going to go. But before I go in and actually put in a trade, what I'm going to do is I'm going to take you onto a little exercise I put together. So quickly go and get yourself a pen and paper if you haven't got one. All right, because you need to make a few notes here. I'm going to show you a simple calculation that you can do that will assist you in calculating your stop loss and take profit. All right, so I'm assuming everybody's got their pen and paper. Everybody's ready? Great stuff. Let's get going, shall we? Let me open up my calculation, and voila, there we have it. Before I go to the calculation, I just want to quickly give you some word of advice there, word of caution, as it were. All right. As a novice trader, people, please, at all times, use a stop loss. Okay. Do not try and trade without a stop loss. It's silly. Okay. Your stop loss is there to protect you if your trade goes against you. The last thing you want is for this trade to start running, and the next minute you look, your account is empty. It's a pretty lousy feeling in the pit of your stomach, I promise you. Okay, so always trade with a stop loss. Those are your breaks, if you want to call it, your safety net. Okay, if you wouldn't go on a long trip, on a busy highway, in a vehicle that you know does not have brakes, unless you've been smoking some Durban ganja, I'm sure you wouldn't do that. Okay, you need to know that those brakes are working. Now, these are here to protect you. All right, so you can minimize your losses and maximize your profits. Now, whilst I'm on that, keep in mind two things. Number one, that all your top traders in the world started where you are right now. So be patient. Don't throw in the towel too soon. Don't trade too big too quickly. Patience, patience, patience. I always use this analogy, and I say, how does one eat an entire herd of elephant? Simple. One mouthful at a time. And this is the same thing when you're trading. Always start small and gradually build up from there. That's the first thing I want to mention. The second thing I want to mention is you have to remember that when you are trading, you are dealing with the biggest market known to man and the oldest. An average of about $4 trillion. 4 trillion. That is 12 zeros, guys. Go through that market on average every day. So it's massive. So you must expect that the market at some stage is going to be unpredictable. To a certain extent, you can predict what it's going to do. But it's going to have the times where it's going to turn around and bite you in the behind. Okay, so if you're not going to be prepared to accept that you're going to have losses when you trade, and you just want to be in profit all the time, never have a loss, my friend, walk away now. Then this is not meant for you. Okay, you must accept the fact that you're going to have losses, but of course you're going to have your profits as well. Your best traders in the world get it wrong 30 to 35% of the time, but 65 to 70% of the time they get it right, and that's where I want you guys to be at. Okay, and it can happen. Patience, 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 patience. Right, so let's go in and in. How to set your stop loss and take profit. Now, what I've done is I've used the exercise, and in the exercise I've used the price that I would purchase that particular currency pair at. And in this particular one, I'm saying it's 1.0 2, 3, 4, 5. Now, let me quickly refresh your memory. What is a pip value? I'm going to mention pip values quite a lot in this exercise. Okay, a pip, simply put, let's take a 1-cent coin and we chop it up into 100 pieces. Each piece is 1 pip, so it is 1/100th of a cent. It's the 4th decimal place. All right, everyone happy? Cool. Right, so now let's look at my example over here. There's my decimal point over there. So I go 1, 2, 3, and that is my 4th decimal place. That number 5. That's my 4th decimal place. That is my pip value. So if that price had to increase from 45 to 46, I've made a pip, assuming I'm trading up, okay? If it dropped by 1 pip, so dropped from 45 to 44, I've lost a pip. Everyone happy with that? Cool. Now, you're probably wondering, but hang on, what about that 6? Why is that sort of hanging to the side there? All right, that is what you call a pipette. It is a percentage of a pip to give you that fraction of an edge when you put in the trade. So, try this exercise, guys. When you put in when you're doing your trades, it doesn't matter if you're trading on a live account or on a demo account. And by the way, if you do trade, always have both of those accounts active. So you can test your strategy on a demo. Works, happiness is great. I go to my live account and I apply it over there. All right. Your demo account is a very useful thing to have, I promise you. Now, let's assume I'm using a ratio, and guys, this is an example. You can choose what ratio you wish to use. It's entirely up to you, because remember, this is your account. This is your little business. Okay, you play around with it and you adjust it and you set it the way you feel comfortable. All right, we cannot advise you when to trade and what to trade, etc. We're not allowed to. Okay, you make that decision. It's called straight-through processing. I've mentioned this before in one of my previous webinars. All right, so now, I have used an example of a ratio of 1 and 3. You can use 1 and 4, 2 and 6, 5 and 10. It's entirely up to you. But for the purpose of the exercise, I'm using a ratio of 1 and 3. In other words, I'm saying I'm prepared to lose 10 pips if it goes against me. However, if it goes in my favor, happiness is I'm going to make 30 pips from that particular trade that I put in. And the beauty of this is that I can set this up before the time. Okay, set up my trade, set up my stop loss and take profit, execute it, close my computer, and carry on with my life. Come back and just come and check, is it going okay? Maybe you just go to bed, tomorrow morning wake up, and you might even find that it's already kicked in, that it's either banked you if you're in a profit or kicked you out if you're in a loss. Okay, so you can sleep peacefully. Right, so when you're doing this, have a piece of paper with you, like I've done right now. Write down the price that you went in for that particular trade. You decide what your ratio is going to be. Okay? In my particular example, I've said 10 and 30, but before I even do that, I do one very important thing, and that is, see this red arrow here? I draw in an arrow. Now that might seem a little bit stupid, but trust me, it's going to save your bacon, because in the excitement of the moment, you might put your stop loss and take profit the wrong way around, especially when it gets to a sell order. I've seen it happen. Okay, so I draw the arrow to say, hello, that's where I want my profit up at the top. How much profit do I want? Okay, I want 30 pips profit. All right, cool. So now I add 30 onto that 45. So that pushes my price up to 75. And that is where I wanted to kick me out, bank my profit, happiness is. But now I don't discard that 6 over there. That's my pipette. What I do is I just carry that number forward. Happy? Same thing happens is if my trade goes against me by 10 pips, okay, that's my acceptable loss. That's where it must kick me out. So if it drops from 2345 to 2335, kick me out. Once again, take my 6, carry it forward. Now it's there. Okay, and this is another reason why I recommend you use a pen and paper, guys, so you don't try and calculate. Look, I know with time you're going to get good at this. You'll be able to just see it, and some of you guys are absolute whizzes and absolute genius as far as seeing numbers and that's it. You can calculate it in your mind. That's great. Okay, but just to safeguard you don't make a silly mistake, write it down. So when you now go and you set your stop loss and take profit, you just copy it from what you've written down. Nice and simple. Now, let's go to a sell order. Okay, so now the role is reversed. And very important, I draw the arrow to remind me, hey, hello, that's where I want my profit. I want it at the bottom. I want it to drop in price. And that's where I'm going to make my money. Okay, so once again, I look at my price, and now I put my 30 at the bottom and my 10 at the top. So if it drops from 45 by 30 pips down to 15, that's where I want it to be, and vice versa, my stop loss. And as I said a little bit earlier on, I've seen this happen a lot of times. In fact, this week, I had a couple of cases that I saw where I taught the guys how to do it, but in the excitement of the moment and in the haste, if you want to call it, they went and they got it wrong, and they did it back to front. That where that should have been 10 pips, they put that 30 pips. And where that should have been 30, they put that 10. And then they suddenly see, oh, but hang on, my stop loss kicked me out, but how come it was such a huge loss? Okay, and that was the reason for it. So write it down. Okay, get used to using this, and with time, you'll be able to just look at it and Bob's around you, you'll be able to put it in yourself. Everybody happy with that? If you want me to send you a copy of this, only a pleasure, just send me an email and I'll forward a copy to you. All right, now we know how to set my stop loss and take profit, how to calculate it. What I want to do now, oh, there we go. Somebody wants to talk to me on Skype. They're just going to have to wait. I'm now going to go to my actual trading platform. What's the first thing I need to do? Bird's eye view, hey? All right. So I'm on a 15-minute graph. Let's go to 1 hour, shall we? Let's look at 1 hour. All right. 1 hour says to me it's coming down. As you can see there, that was quite a sharp climb there. And you normally find that if it does climb so steeply, chances are it's going to turn, it's going to rectify itself, okay? But then that's where the stop loss comes in. What if it doesn't? What if for some reason, unbeknown to us, an event happens somewhere in the world, across the globe, and suddenly this thing turns and starts running in the opposite direction? I've got to protect myself. That's why I use a stop loss. Okay, so now, 1 hour graph says it's turning, it's coming down. Okay, my 30 minute, there we go, 30 minutes says it's coming down. 15 minutes, how do you like them apples? It's sort of going the opposite way. So, oh, now what do I do? All right, okay, let's go and have a look. And let's say we go 5 minutes, and then it says it wants to turn. So, a bit of an interesting situation here, wouldn't you agree? Okay, so this now depends on yourself. How long are you prepared to set the trade? So you could maybe take a chance, say, all right, fine, I'm going to put in a buy, but that's on a 5-minute graph. However, my 30-minute graph says to me it's busy turning. All right, so, all right, for the sake of the exercise, all right, I'm going to throw caution to the wind, and I'm going to put in a buy trade. All right, and I'm doing this specifically because I see it wants to go down. It's turning into sell mode, and I want to show you how my stop loss is going to protect me. So I've decided I'm going to place an order, and now, guys, get your pen and paper close by again, because you need to write this down. This is so important, eh? If you make a mess here, it can hurt you badly, I promise you. All right, so you need to understand what is your volume size. First things first, the smallest volume I can trade is 0.01. 0.01. That is a micro lot. It's the smallest. What does that mean? It means I'm trading 10 cents a pip. If it goes in my favor, I've made 10 cents. If it goes against me, I've lost 10 cents. And that is a unit size of 1,000. Okay. The second size I get, and it's not on this list, so you're going to type it in. That is 0.10. All right, and there we go. 0.10 is a mini lot, and that is $1 a pip. And it's a unit size of 10,000. All right, happy with that? Great. Then we get the big land. Here it is over here. 1.00. Now, guys, if you've got a small account, be careful of this chappy, hey? Because now you're trading $10 a pip. 1.00, $10. That is a standard lot size. In other words, the unit is 100,000. Okay. If you've got an account that's, let's say, $1,000 or less, be careful trading this lot size, because if it goes against you, it's going to hit you hard. Look, if it goes in your favor, hey, happiness is you're smiling. All right. But just be careful. Always remember, don't try and fly too high too quickly. Too many novice traders make that error. They get greedy. They want to get rich too quickly. This is by no means a get-rich-quick scheme. It's not going to happen. You're not going to suddenly develop the Midas touch. Okay, patience, patience, patience. Right, so now I've now decided to put in my trade. I'm going to change my volume size. I don't like that big amount, so I'm going to go that's right, that's the mini lot, $1 a pip. Now I've set my lot size. I'm happy, and I press buy. And there goes my trade. Happiness is. And now I can't see where's my trade. There's my trade line there. I hope you can see it. Okay, there it is. That's where I went in with my trade. And now I want to see what my trade is worth. I go to my terminal. There we go. And in my terminal, there I have it. I'm now running at a minus already. Okay, and you're probably thinking about, how come? Well, that is where ACM Gold makes their money. It's called your spread, the difference between the buying and the selling price. All right? So now, that is where we make our money. We take that off up front. Whether you make or lose money is immaterial. Should you now make a profit, that is yours. We don't take a commission off that. So if you're trading currency pairs and commodities and CFDs, we don't take a commission off that. If you're trading indices, like your JSE and the Dow Jones, etc., then there is a commission that's payable. All right, but we're not going to go into that right now. We're just sticking to the big guns to start off with. So now I need to set it. Now you remember the exercise? I'm using a ratio of 1 and 3. Okay. Remember I said to you, I look at my price. There's my price there. Everybody happy? 1.36640. That 0 is my pipette. Correct. The 4 is my pip value. It's the 4th decimal place. Fantastic. Now, I'm saying if it goes down to 1.3654, it's dropped by 10 pips, correct? That's when it must kick me out. But if it goes up by 30 pips, so it'll increase to 1.3664 to 3694. That's where I wanted to cash me in. All right. Are you happy with that? Now, this is how I set it. I click on the trade line, right click, modify or delete order. I highlight, I put my stop loss first. I highlight that, and I said if it drops from 13364 to 13654, 1.3654, and bring your 0 in as well, that's where it must kick me out. It highlights in blue. Why? Because I'm buying, I'm going long, okay, so it's happy. If nothing happens with that bar over there, that long bar, it means it's gone past the price. Then you're going to recalculate. Then my profit, where do I want it? 1.3664, it must go up to 1.3694, correct, 1.36940. Happy with that? And then I have to click that bar, and there we have it. We are set. Did you notice what happened? Suddenly, that went pink over there. You know why? Well, it's because, look at that candle there. It's moving. It's below my purchase price. Here's my purchase price. Here's my stop loss. Where's my take profit? Okay, this is how you fix it. Click on there, hold and drag, and there we have it. There's my profit level. That's where I wanted to go, and that's where I wanted to kick me out. But now it's heading down. Now, guys, just before I end this session, this is the way you can set your stop loss and take profit. Once again, I've used an example of 1 and 3, 10 to 30. You can do 1 and 1 if you want to. You can do 10 to 100. You can do 20 to 80. It's entirely up to you. What do you feel comfortable with? So use your demo account. Test it. Try it out. See how it works. All right? And then from there, you can decide, right, this is what I'm going to do. You execute it, put it into your live account, and off you go. And also, in closing, let's say I'm happy about this. I see it's turning slightly, but I'm saying, no, I've got a gut feeling. Look at my other graphs, the other time zones. It's going up. So I think it's just adjusting itself now. I don't want it to kick me out. So I can always go back. And I can always go right-click, and I can go modify my order. So in other words, I can say, right, instead of putting my stop loss at 10, I'm going to put my stop loss at 20. All right. So I highlight there. What is my price? 3664. So if I drop it by 20, it'll be 3644. Correct. 1.36440. Okay. And I click it. And suddenly, did you see what happened there? Did you see what happened there? That pink is now gone. Why? Because it's now away from the danger area here. Hey? All right. And then I can do the same with my stop loss. I beg your pardon, my take profit. I can always go and I can move that. Now, one of my favorite ways of trading is, and I like to leave my trading for a couple of days. I would use 2060. That's what I've chosen. Okay. And I love to, if it's going in my favor, I like to periodically go in and do those adjustments. And then as it's moving in the direction I wanted to, I would go and I would adjust my stop loss and take profit by, let's say, 5 points at a time. So eventually what is going to happen is, and assuming it carries on the way I want it to, eventually with me moving these up slightly by 5, there we go, it'll eventually move past my purchase price and go higher and higher above my purchase price. So even if the stop loss eventually kicks me out, that amount that I passed my purchase price by is mine. What a pleasure. Okay, so there we go. I didn't take any questions tonight because I found that when I do open the mics, there's a horrible feedback and I cannot hear a word people are saying. So, guys, if you have typed in questions, I'm going to go through the questions there. I've got all your contact details and I will communicate it with you either via email or I will give you a call in the morning. So if you have any questions, please, you can reach me on Tony James at acmgold.com, or you can go to support@acmgold.com. Okay? Send those queries through to me. If you have any questions, look, we try and keep these very basic because this is aimed at our novice traders, all right? We don't go through to the heavy technical stuff, but what I will mention is we've got one of our IBs. These guys are professional traders and they specialize in trading gold and silver. Now, they did a seminar last week, Friday, which I thoroughly enjoyed. I really got some very, very valuable information out of that. They show you how to read the markets. They'll discuss events that are happening and what that event is going to have, or what effect, should I say, that event is going to have on the gold and the silver and other currency pairs. So once a week, maybe on a Monday, go in to our website and then you'll see it'll either be my ugly mug over there or these chaps will be over there. It'll be these two photos and then register for them. So we're going to be alternating there. They're going to do 1 week. I'll do the basics and they'll do the advanced stuff. So, and pretty exciting stuff. So from my side, that's all for now. Good luck with your trades. Keep in touch. If you need help, you've got the backup and support over here. Give us a call. Our telephone number is 011 784 0603. I'll repeat that, 011 784 0603. Okay, good luck, guys. And when you make $1 million, just keep me in mind, eh? Okay, cheers.